Good afternoon, everybody. Hi, how are you all? I'm Shuchi and I have Abhijit with me here discussing markets today. The entire concept of trading, art and science of trading, I think a very close concept to Abhijit's heart, and I think he'll love to speak on this topic. Uh, so, welcome all of you. I'll quickly lay down the agenda of the session. We'll discuss markets, we'll discuss how traders can trade in these challenging markets, what are the key things, how they can actually manage their psychology, how can they keep their sanity in the markets. And then, towards the end of the session, we'll take some questions also. Yes, welcome, Abhijit.
Thank you, Suchi. It's always a pleasure coming back and discussing with Elon Markets and everyone who's joined in. Very good evening.
So, how was your day today in the markets?
It was just like the market at times jumping on your seat that it's going to give us a breakout. And then, see, the markets have been typically very volatile, um, very rude, I would say, to the short-term traders. By the time you expect the breakout, it gives false moves. But this is the nature of the market. I should not complain. I've seen this market long enough, not very long enough, but 18 years is not a small span of time.
Right.
Market gives it shows both the sides of it. One side of it is you put in very little effort but still making money is very easy. Those are the trending phases of the market, especially on the upside. And then there's a slightly nastier side to it, which is this one that we are dealing with. It's a phase, like we all know. It will also pass, and so it will also pass. It's just that by the time it passes, have you been damaged significantly or not? So saving, preserving one's capital is, I think, more important now, and not making money.
Right. I think this particular point is very covered well by you in the online technical analysis course which you host on Elon Markets. And I think time and again students have come up and said it's not about the correct trade, but it is about the correct attitude which you are actually embedding amongst the students, which is very important. So I
Right.
think since yeah.
Yes, I also learned it the hard way, uh, because anyone who starts in the market always wants to make a lot of money in a very little span of time. And I
Right.
think everyone begins like this until the market comes in front and teaches you the reality. And I feel that markets move through those phases where the iron is hot. This is where you should hit, because this is the time you make money for the next 3 months or 6 months. Then a difficult phase comes, जहाँ पे आपको चुपचाप बैठना है. You have to just make sure you do not lose. See, one thing that has happened with me multiple times in my past, and many people whom I know, is generating returns, making money is not that difficult. I think twice is difficult of retaining it,
Correct.
consistently keeping it. So my career as a trainer had given me huge exposure to people who have shared their stories with me, why they trade, what kind of trading experience they had. And there is a session on trader psychology that I take up during the end of the course, wherein
Yeah.
I talk about, listen, we have learned the ways to enter a trade. We know where to put the stop loss. We know agar chart mein aisa dikha, how can you trade. All these
Hmm.
things are fine. All these
Hmm.
things you know theoretically. We have seen enough examples on the chart theoretically. But when the time actually comes that you will actually be trading these setups with your real money, that is where you need to have a far more sorted head over your shoulders so that you can take it forward. When we look at the charts, यहाँ खरीदा था, ऐसे चला था, it looks fine. But when tomorrow I buy a stock and when it is going up and down, that thing is something that one needs to master upon. Takes time, but it's always good, um, to be as sorted as possible, having clarity. So I don't know whether the next trade of mine is going to give me profit or not. I just want to stick to the discipline in which I trade. That is, I think, far more important.
I think I still remember one of these days you had mentioned during your classes that you know, it's trading prices are like human heartbeat. So it goes up down, and that's exactly what happens when you take up a trade, which needs to be in control, right?
Yes, the heartbeat is just a very monotonous way of doing lub dub lub dub. It's
Yes.
just when you take a trade, it becomes lub dub lub dub. It just spikes up a little. But
Yes.
these things generally happen at the initial phase, years of anyone. With a little bit of time experience behind you, that excitement actually dwindles down.
Right.
Uh, I think in my case at least, like anyone else, when I started, I was highly excited about the markets. It was like a rush, as an adrenaline rush. But now having said this, now it's more like doing a good trade. I wanna get into a trade. After I entered, I timed it really well. It has moved in my favor. It is giving me some. So getting it done properly, I think, excites me more than how much I can make out of it.
Right. So, Abhijit, like if we take an example of yesterday's market, so it opened gap up, went up high, all sorts of pessimism amongst the traders, and then suddenly it came off. Whether it was global factors, whether it was dollar index, whatever the reason may be, like how does a trader actually participate in such kind of markets, or how do they keep their mental sanity in such kind of cases even though the systems are in place?
See, um, what happened yesterday and what happened today was essentially the psychological 16K mark playing its part.
Right.
Very clearly, yesterday's high for the Nifty futures was 16,014. Today, later on, it closed at 16,020. So that 16,000 overhang was very, very clear. And I'm talking very technical point of view now.
Right.
But when it comes to someone who does not have the 16K mark in view,
Hmm.
one thing was clear towards yesterday's close, afternoon, when the market started to come down. It seemed like more of a short term correction and it should bounce back. And it should bounce back. And it didn't bounce back. It just kept it taking the overall market down with it.
Yeah.
And when you opened today morning, you would have felt that yesterday's close was pretty weak. Let's see what it does. It seems like a breakout failure. It's just the yin and yang, just the opposite happened. It just opened down a little on the lower side. Reliance was down throughout the first morning half, and then the bounce back came, and now we are above yesterday's high. In fact, Nifty has closed at the highest point of the day.
Right. I
So,
think
so
highest after a month almost. Highest
yes,
point after a month almost today.
the 1602 on my charts. I have the charts open in front of me. Was last seen in 26th of May.
You
So
could
yes,
share the charts also in case to our viewers, I think.
sure. Let me try share slides. Okay, your computer. Let me try this. No,
The plus button share.
yes, shares.
Right. I
Let me
can
know
see.
if you can see the chart.
Yes, we can see the
Yeah.
chart now.
Yeah.
Yeah.
So if I show you the 15 minutes time frame, so
Hmm.
this is exactly what we went through yesterday. A pretty nice move up, then
Right.
complete giveaway. And today, especially this move was pretty strong. Now, stocks like Hindustan Unilever, few banking stocks, State Bank was also doing its part pretty well. Reliance was playing its part predominantly on the downside. You can see Reliance is the only stock within Nifty 50, Nifty. This is around 15, 16 stocks which I track. Was the only stock which was down. So it's not an easy market. Let's take it. Okay, if you ask anyone who's got some experience behind him or her, they'll tell you this is not an easy market. An easy market is one for the equity market which trends steadily on the upside,
Right.
right? Uh, Downtrending markets are far more volatile, and today's move is quite interesting. Tomorrow we have the weekly expiry of the options contract. Generally, it's the call option that tends to expire worthless, but let's see whether
Tomorrow.
that's tomorrow.
Tomorrow we have, yeah.
Tomorrow, yeah,
Thursday.
exactly. Thursday, correct. So, keeping everything in mind, what I have learned my way, Suchi, is Every day, every week, every month, I'm not going to make it. Means to make consistent returns. At
Correct.
times, few days, few weeks, few months, maybe I just have to let the market make its noise. As if the market is making a lot of noise. This is how I trying to visualize that market is let's say having a street fight, two dogs fighting and barking at each other, like let's say the bulls and the bears. And I can see that, and I can really understand that this is not my paradigm. This is not my kind of market to trade. So let them do whatever they want to do. Someone will emerge for sure. And once someone emerges, then I would, try and pace up and trade heavily. Now, this what I said right now is primarily from a short-term trader's point of view. An investor's mentality should be very different.
Okay.
Investor's point of view would be like 18% market down, Nifty down. What are the pockets of stocks that I can buy at a discount? So,
So, do we,
investors,
as an
yes.
investor, like, should an investor also have a knowledge of basic technicals like what you teach in your online technical analysis course, where he could actually plan their investments, or it is just the fundamentals they need to look at and they can place their commitments?
That depends. My personal experience during my days in Mumbai when I used to work for the sell side, even though they all used to come out with their fundamental reports, taking a look at the charts or trying to time is always a sensible thing. So I'm not
Hmm.
suggesting that you pay a lot of weightage to the charts, considering, let's make an assumption that you're really good with your fundamentals of the company. You may take a look at the charts to time it better. When you take a look at long-term charts of, let's say, I just randomly open ITC.
Yeah.
So when you take a look at the charts, and ITC after a very long time is actually giving you a good move, and you can see, let's say I'll open the monthly charts. Yes. So you can see that ITC has moved above some serious levels, which it
Right.
had faced some serious resistance. So some visual understanding of the behavior of the price is also very important. So we can use the charts technicals to buy stocks or get into sectors when they are correcting. But if you are very fundamental heavy and you know that this particular stock is fundamentally very strong, then technicals can definitely help you to time it. Number one,
Right.
technicals will give you an idea about what has happened in the past. So let's take a look at HDFC's cash market chart, and I can see that as HDFC is trying to bottom out here and give us a bounce back, I know where were the levels in the past from where the stock had reacted. So this
Hmm.
gives a certain clarity to the investor trader.
So, Abhijit, like, when a person is learning technical analysis, say your online technical analysis course, if somebody is learning, so I think the first thing which a person learns is about trend.
Yes.
So when we spoke about trend, we spoke about bullish trend, and how markets are comparatively easier, lesser, on the volatile side, and the psychology is also, it's easier to keep that insanity. So are bear markets typically like this always, and can we call this as a bear market?
Now, calling a market bear market will need a certain logic behind it. If you can call a bear market when it's, let's say, 20% off from its highs, you can call a depression when let's say it is two quarters have given you lesser sales. Or so people may have different ways of defining a recession or a depression or a bear market. Um, I use, let's say, for example, a set of moving averages. In fact, in our course also, and it's been for many years in the course that time and again I have reflected that how a simple set of moving averages can play such a unique and simple tool for you to understand what is the trend of the price or the
Correct.
trend of the chart. So as you can see on my charts, I have a couple of moving averages over here, and I use them very actively to give me a sense about the drift of the market. So
Right.
this is discussed in the course, and a lot of weightage and importance is given to this aspect, because trend is definitely your friend. Means making money in a range bound market is difficult, and making money in a trending market, either up or down, is relatively easier. And between them, making money in a trending uptrend is relative than making money in a trending
down.
downward market.
So ideally, we need to understand the trend, and there are probably certain parameters based on either fundamentals or technical tools which a user learns when he is learning technical analysis, online technical analysis, this particular course which you have been taking up in on e-learn markets, ever since. So
Right.
they effectively have those tools and can with clarity identify the trend, and they can probably strategize their market participation. Can I put it up like that?
Yes, I say this, and I think I have said this in almost all the 58 batches that I've taken as a
Hmm.
faculty for ASD,
Hmm.
is that I don't know that after doing the course whether you will make a lot of money or not. But what my attempt and my objective as a trainer is to try and give you as much clarity. You want to trade with confidence and clarity, so that which stock should I buy, at what price should I get myself into, what sort of quantity should I buy, where should be my stop loss, where should be my target. All the necessary questions, if someone answers while taking the trade, before taking the trade, then trading does not become very stressful. It's just that you're looking for a set of uh, conditions. When you see those conditions, you take the trade, you put in a stop loss so that you preserve your capital, and you keep on doing it again and again and again and again and again, and you try to become better at it. You learn from your mistakes and you do it again and again. So it's a monotonous thing.
Right.
And clarity is something that I seek in myself as a trader, and that's what I bring in with AST also.
Right. Right. So, Abhijit, how should a user actually, what's your take on applying strategies? Is should somebody be equipped with lot many strategies, or it could be just two or three strategies which you are, focusing on the this particular online technical analysis course, and where students have been consistently, working on it, making money. We've got those live sessions also,
Yes,
where you actually talk about taking those particular strategies, how they apply on the live markets. So,
right,
because as human psychology, we want to know more. ये strategy भी, वो strategy भी, ये भी सीखना है, वो भी सीखना है.
right.
So, how should we actually go about it, and like क्या करना चाहिए, कैसे होना चाहिए?
So the way I deal with it as a trainer and as a trader myself also is, I think that strategies can be of three basic types: a breakout strategy, a pullback strategy, and a contra strategy, which is a contrarian strategy.
Right.
And I discuss these concepts in detail in our classes. Breakout is when a stock is breaking out of a range. Pullback is buy on a dip, sell on a rise. Contrarian trading is buying the fall and selling the rise. Now, these are not strategies; these are categories of strategies.
Right.
Within each, I can have like n number of breakout strategies. I can have n different ways to do a pullback strategy. I can have n different ways of doing a contrarian strategy.
Hmm.
There cannot be one, there can be hundreds actually.
Hmm.
So what I have done to myself and what I've tried to bring in with AST is make the listener, make the student understand breakout strategy hota kya hai, pullback strategy क्या होता है, charts पे कैसा दिखता है, and what exactly is a contrarian strategy. And
Okay.
with a setup, I show them this is how you should do a breakout strategy. This is a way to do a breakout strategy. This is a way to do a pullback strategy. Wait for the trend, wait for the bounce back, then go for it, sell. And then I show them also how to do a contrarian strategy, right? How to buy and take. Now that a student understands breakout, contrarian, pullback, with his experience, with his level of interest, intelligence, he can tweak the system, the setup little here and there, and he creates his own strategy. He can. And many
Okay.
of my past students have done that. Having said this, when you have so many strategies or setups, it might get a little confusing, especially अगर आप manually trade कर रहे हो. If you are
Hmm.
manually doing it, looking at the charts, then at times you might get some contradiction between whether this is a pullback or whether it's a contra trade. So confusion hoga. And that's why I have seen with myself, at least, with myself very, very clearly, swing trading or the pullback trading suits my temperament and my style of trading the most, right? This is completely my opinion, and we have an amazing setup called the Aim and Shoot, which I've been sharing and teaching in AST for I don't remember how many past batches.
Hmm.
And time and again, I get some very good feedback for this particular pullback strategy. We call it Aim and Shoot.
Can we see one of these examples on the chart? I think that will give the confidence. Any one such trade setup, which works.
Simple. Uh, Pullback strategy is you wait for the pullback. Those who are
Right.
listening to us today and have very limited understanding of the charts, so I will make it very simple for you. Is pullback is essentially you wait for the charts, for the markets, for the stock to develop a trend, a nice trend,
Hmm. Hmm.
and there are ways to define this trend that anyways I share in the class.
Right.
And then what you do is you wait for a pullback. Pullback is going opposite to the main flow of the market. If the
Right.
stock has been falling, going up is the pullback. This is a pullback. This is a pullback. This is a pullback. Now this is a chart of Dixon which I shared. I think a call couple of days back. I'll talk about it a little later. But
Hmm.
selling on a rise. So the downward drift has been defined. The stock has given us a bounce back, and we would look like to sell on the rise. The opposite is buying on a dip. Let's say Hindustan Unilever is a stock which has been going up very strong right now. So you
Right.
can very clearly see that it gave a move like this, then a
Gave a push.
contra move, a short term correction, and this move. So an aim and shoot, a pullback trader will try to initiate the trade
Yeah.
over here. That
Okay.
is a pullback trade on the long side. On the short side, a pullback trader will try and sell these areas. If you're trying to sell the rise in a main downtrending market, trying to capture these falls, you are a pullback trader.
Correct.
Now, I personally, with my understanding, experience, tend to have kind of specialized more towards this side of trading. I do not like breakout trading so much. They are powerful when they go right, and contrarian also at times are fine. But pullback swing trades, I feel, are the sweet spots, which if done properly, gives you the maximum consistency.
Right. So, Abhijit, I think apart from these three categories of swing trades, I think it's very important for a user or any market participant to know when to use what. He can't
Mm,
be really sticking to any particular strategy because markets are dynamic and it keeps changing. So, do we actually, is it, how can a user learn about these things? And, what's the importance, how much weightage should be given to
right.
just know the fact, but to when to use what?
Right. Now, when to use what is very important for someone who's trading only one or two instruments. Say, for example, I'm trading only the Nifty or the Bank Nifty.
Hmm.
So, if I'm trading only the Bank Nifty, let's say this is the
Hmm.
Bank Nifty, right? And Bank Nifty will go through its phases. It will go through a phase of downtrend. It will go through a very volatile phase.
Hmm.
It will do all the various things.
Hmm.
Now,
Hmm.
as the nature of Bank Nifty changes, I will have to equip myself when to use what, when to
Hmm.
use moving averages, when to use oscillators, when not to do, right? So I
Hmm.
have to keep on adapting myself with the movement of the instrument that I'm trading.
Okay. Yeah.
And if the instrument, if the script, if the underlying is very, very volatile, I will have to flip very fast. And this can lead to a lot of stress. You can understand that very well. The other way is the other side to this is you let the market do whatever it wants. You only look for one particular alignment of setup. I
Okay.
will look for a strong trending stock. I will look for a short term correction in that strong trending stock. I will wait for the volatility to slow down. Hopefully, the stock will be from the sector which has a little bit of relative strength. And when the stock starts to give a turnaround, I will buy with a stop loss and something, something. So I just created a story. I just created a set
Right.
of rules. This is a set of rules कि जब मुझे
Right.
ऐसे ऐसे दिखेगा तब ही मैं सौदा करूंगा.
Correct.
Now, in this, there is a plus side is that you're very, very clear आपको कब trade लेना. Only when these things align, I'm going to take the trade. Now, this someone who's trading only the Nifty or the bank Nifty or just two or three stocks or five stocks, this will not work for him so well because in that case, what will happen? He will have to sit on the sidelines and wait for his setup to appear, to shape
Hmm.
up. And that might lead to days of no trades. For a trader, days of no trades is very, very boring. And so, if someone is looking at a slightly larger universe of stocks,
Hmm.
and within that universe of stocks, कुछ ना कुछ stocks तो रोजाना आपको मिल ही जाएगा, where you know your setup is there, your rules have been. So you take the
Hmm.
trade. I, to a lot of extent, prefer this route that you have to have a very well defined set of rules for your
Agree.
charts, and whenever you find that, you can trade it. For bank nifty traders, another easy way is you can change your time frames. You look at the 5 minute chart, the 15-minute chart, the hourly chart, the 75-minute chart. So stick to only one because जितना आप कोशिश करेंगे कि oh the markets have changed the underlying nature, मुझे भी change करना पड़ेगा. The moment you change, then the market changes again. So I think it doesn't make sense for you to change your style. You stick to your style and you patiently wait for the market to deliver that setup and you go for it.
So, Abhijit, suppose if I'm just trading one instrument, say for example, Bank Nifty, and I
Yes.
have a set of strategy.
Hmm.
So, set of rules, set of scans which I follow. So, if that perfect setup, if I get it, I trade. Otherwise, I'm waiting. Now,
Right.
do I keep switching my time frames also? कि अरे ये 1 hourly chart पे हुआ कि नहीं और 15 minute time frame पे हुआ कि नहीं और monthly
Right.
time frame पे हुआ कि नहीं? Do I do that or do I stick to my time frame also? The rules are defined, but the time frame keeps on switching just in the hope of getting some trade.
Right. This of course is a function of your activity in the market. If you are someone who's fairly active in the market or wants to be active in the market, it means that you can dedicate a lot of resource to the market. Then you should look at multiple time frames: 5 minutes, 15 minutes, 25 minutes, 75 minutes, 125 minutes daily chart. So I personally look at 15, 25, 75 daily, right? And I take a look at Nifty, Bank Nifty very closely, and I also take a look at these stocks. So रोजाना मुझे कुछ ना कुछ ideas मिल ही जाते हैं. I
Hmm.
have no problem with that. Um, so if you're trading only one instrument, only
Hmm.
one time frame, मतलब सोचिए Bank Nifty and 15-minute chart.
Hmm.
So Bank Nifty 15-minute chart, as you can see right in front of you, had an amazing run up, had a very
Right.
sharp fall, and a staggered leg up, which we saw. Now, there might be days that you will just have to quietly wait for
Do
your
nothing.
setup and do nothing. So it's a game of patience. Patience. One side of patience is patiently waiting for the setup, patiently waiting for the trade, and second, also after you've entered the trade, you need the patience to sit on it. That is. I think I find it a little more difficult than waiting for the trade. So it is clearly a function of your degree of activity. अगर आपका activity बहुत कम है, you have a job or a business, and trading is not your full-time endeavor, then sticking to just one or two time frames or just one time frame is perfect because उसमें आपका ज़्यादा interference, your involvement is not required. The moment you increase it by four different time frames, you need to be four times more involved. You need to be there in front of your charts.
So, Abhijit, suppose if I want to learn and AST, I want to enroll for online technical analysis. So, even if I'm a beginner, total beginner,
Mhm.
Will I be, and I want to be an active market participant. So
Mhm.
will I be able to be like, would I be equipped enough to actually go through all the nitty-gritties of the markets, the psychology, the basic study which is required? And will I be able to start my regular trading journey in the markets through this course?
Yes, as I said some time back, the most important word that I try to bring in with the course to those who enrolled for this particular course is
Clarity.
I try my best to bring in clarity. Means at the end of the course, he or she will be number one, able to recognize a trade. Number two, will know where to put the entry. मतलब कहाँ पे उसका entry होना चाहिए trade. Once he or she enters the trade, where should be the stop loss? How much quantity should he or she take depending on her capital size, risk profiling, risk appetite, etc. And then where, if it starts to go up, where should he book some profits? So if you look back, if you have answers to all these questions,
Hmm.
that brings clarity कि मुझे पता है कल मुझे एचडीएफसी बैंक में इस भाव के ऊपर खरीदना है, इसका स्टॉप लॉस होगा और ऊपर में अगर चल गया तो ये मेरा टारगेट होगा, और इस ट्रेड के लिए आई एम गोना टेक 5 लॉस और 10 लॉस और 3 लॉस. दैट्स इट. It's not like that कि हाँ चलो मार्केट खुला है, let's see कहाँ क्या खरीदे. So that's random. So my
Right.
focus is, as a trader and as a trainer also, is to bring in clarity rather than talking about 100 different things. I would rather share one or two things and ask you to do it 100 times
Hmm.
so that you not only get clarity but you get the confidence also.
Right. So, Abhijit, can we just open Nifty and discuss how can we actually see Nifty going forward?
Sure. So if we take a look at the daily chart of Nifty,
Hmm.
so last 2 days, yesterday and today, have been particularly, it's like a seesaw. And what the index has managed to do with this move is managed to take out this zone. It's been right beneath this zone. There was a
Right.
gap down. There was a gap down that the index fell with a very hard gap down. And after a long time, the index has managed some kind of a bounce back. Now, take a look at this fall. From this point onwards till this point, the market, or let's say till this point, the market has given us this recent bounce back, this bounce back, and I don't think we should call this a bounce back, very shallow one. Let's
Hmm.
evaluate. If you take a look at the middle one from the low to high point, it was around a 6%, 6.6% bounce back, and it lasted for around 16 days. This one was very shallow. We can go all the way up here. It's around 3% in 8 days. And then you can come down to this point, which you are dealing with right now. It's around 5% in 12 bars.
Hmm.
So if we let go of this, this was more like a consolidation. If we compare this with this, we're more or less there. We're more or less 12 bars, 5%, 16 bars, 6%. It's not bad. Last time when it led to this trend reversal, it was a reversal. It failed. So very
Right.
importantly is whether this time it will manage to hold on to itself or not. We've seen Bank Nifty now. This is where not just Nifty and not just levels of Nifty are important, but this is where a holistic understanding of the markets, or a wider approach towards the market is important. What do I mean by this? What do I mean is it is important we ask that which are the sectors which is bouncing back with the market,
Yeah.
which are the stocks which is supporting this bounce back, what kind of a weightage are these, large cap stocks, are these small cap stocks. So essentially trying to understand the quality of the bounce back. Is the bounce back of a good quality or not such a good quality? Good quality would mean participation from heavyweights. If the banking, IT stocks, IT of course have bounced back, but not as much as banks. So understanding कि overall बाजार में हो क्या रहा है. Now we can
Market
take
trend.
it one layer further. We can talk about, okay, inflation was a happening thing, crude was going off. Let's take a look at the crude. Let's take a look. So धीरे धीरे सिर्फ और सिर्फ निफ्टी ना देख के, if you try to take a look at the overall markets, other stocks
Hmm.
and other sectors, other asset classes which matters to the market, like a crude or a gold or a USD, then आपका समझ it tends to become much more. इसका मतलब ये नहीं है that you're going to get each and every trade right. It's
Hmm.
just that you get a better understanding.
So it's again, market psychology, understanding the market breadth, sentiment, market sentiments, and everything, so that we can connect to the charts better. I think.
Yes, very much.
So Abhijit, often, I have come across situations where the instrument and the chart is same. Say, for example, Nifty, and there could be a
Mhm.
set of analysts which are talking bullish, looking at the same charts, and a class of people and analysts again looking at the same chart, talking it to be bearish. So,
Right.
how is, if it is a science, if technical analysis is science, then you know is this the art which compares this people to say like this, or why is this so? Why do we come across like things like this?
Okay, first, let us understand this, that we need two persons with opposite views at the same point of time for a trade to happen. A
Yeah.
seller, a seller is looking to sell. A buyer is looking to buy. A buyer always wants to buy at a lower price. If he knew he would get it lower, he will never buy at that price. A
Hmm.
seller always wants to sell at a higher price. If he knew that he could sell at a higher price, he will not sell at a particular price. But
Right.
still, every second in our markets and any markets, we see buying and selling happening, and both of them agree at a certain price where the buyer buys and the seller sells. And right after that, within a minute or 5 minutes, the price is somewhere different. The price is either higher or lower. The moment it
Right.
goes higher, the seller will feel bad. Oh, I could have sold it higher, and the buyer. So, very important it is that this difference between these two sides of the market at the same point of price needs to stay, or else there will be no market. So we
Right.
need a greater monkey all the time. Now the point is, if we randomly take 100 people and we train these 100 people for 1 year and we give them the charts, then all 100 of them should act exactly the same like a machine. All
Right.
100 of them should be either bullish or bearish.
Right.
The answer is yes, it should be, but it's not a perfect science. It's not actually a science. It's more of a behavioral science, if you ask me, because you bring in your own um, discretion with it. If I create strategies and setups, and if I 100% automate the process, 100% automation, where I
Hmm.
don't bring in any kind of tweaking,
Hmm.
then all 100 of them would have behaved the same. But the once all 100 of them start to trade discretionary, that is looking at the charts and taking a discretionary view, taking a view by themselves, not a machine, all of them will bring in their own discretion, and there will be subtle differences, and those differences reflect in their performance. I have seen this happening so many times. Especially if you remember, in our Pretoria Street office, we used to conduct AST practical classes
Right.
in that larger classroom.
Now we have it
And
online.
now we
Yes.
have it online. And
Yes.
so in those times, we used to do trades during the market hours, during our practical classes. And we used
Right.
to take a look at the trades that the two students have done. And I every time used to find that they all know the same concept. They all have access to the same things at the same point of time during live real markets. But few of them used to perform really well, most of them more or less average, and few of them just didn't get it. So I, as a trainer, it used to intrigue me that I have put the same amount of time, effort, and I've spoken to the, I've kind of helped them, each and every one of them, the same way.
Hmm.
And I do not doubt their question. I do not doubt that they don't understand the concepts. They all understand it fine enough. It's about the execution. It's about
Right.
the execution, the fact that we all know that we should work out and do a little bit of exercise to feel good and be good. पता सबको है. But
Then,
to do it, yes, everyone tends to do it slightly differently, and this is where the difference relies. Or else, forget me and you, forget the two students. Take a look at all the mutual funds, the AMCs. You will take a look at the fund managers and their experience. You'll more or less find all very similar, very talented people, highly experienced. Their AMCs, their mutual fund schemes will more or less have the same stocks, but do their performance are the same? The large cap fund of Axis, Kotak, LNTO, they're different. Not hugely different, but still it's different.
right,
Same, same thing.
right. And that is why we call it art and science of trading.
That's yeah, exactly. That's why we named it
Art
uh,
and,
7 years back, art and science of trading, because it is an art. The
hmm,
psychological part is the art. The science is more about the numbers and the price and the setup and the technique. And the art is to deliver that technique, to be able to
hmm,
execute that technique.
hmm, right. That was great. Abhijit, so I think I would like to take a few questions before we
Sure.
can proceed. So I have a question by Kiran. She wants to know the view on CCL and Praj Industries, if we can do that.
Praj Industries. All right. So Praj Industries has given us a short-term breakout in today's trade. I'm going to take a look at the weekly chart of Praj first. So what it clearly strikes me is Praj is doing nothing but consolidating after a huge run-up that it had, and it's just buying time. These kind of consolidations are really frustrating, and you require a big time breakout to gain higher upsides. Till that happens, it's going to stay volatile. And with today's move, it has given us a short term breakout, which is retesting its previous highs. Looks okay. We should not also forget that the markets are supporting it also. The overall market sentiment has improved. A 400 kind of levels is doable. These kind of consolidations generally give us the length of the movement. So yes, 400 is possible if the overall market sustains, is doable. CCL products, I believe, was the question for the second one. That's this stock has also given you a fresh breakout, a symmetrical triangular breakout. These kind of patterns we also discussed during our classes. It's more like a pennant. I'll call it a pennant rather than
Yeah,
symmetrical. It's given us a nice breakout. It needs to deal with this resistances, which is around
yeah,
close to 420. Um, Now it is also breaking out. So multiple breakouts are happening. It has broken out from this range. Now it is breaking out from this pennant kind of a behavior. So again, one stock which is picking up with the overall market. Again, if you take a look at the weekly chart of this, you again see the similar kind of a behavior that over the last, I think, a year or so, it has not done anything. It has stayed range bound. So momentum breakouts in both of them. This is a far stronger breakout. It's I think a gain of 5.5% almost, and it's straight away it needs to be with 420. Both looks good, and if these breakouts sustain, you should get higher upsides. Just remember one thing: more than 70% of the market, the stocks in the market moves depending on the benchmark index. If the Nifty fails to hold and the overall market slips, no matter how strong the breakout you had, there is a high chance that it will also fail. So both the stocks, your Praj and CCL, looks prospective for further upsides, provided the market sustains its recent move.
Abhijit, often, we've discussed in our classes also that we should follow a top-down approach. Like we look at the weekly charts, when we look at the daily charts, we look at the overall sector, the index, as you mentioned. Okay,
Mhm.
that gives much more clarity. Now, when we have a top-down approach, do we actually include the macro factors also, like like yesterday what happened? There was a commodity sell off, there were crude crashing at one place, dollar index was rising again. There was a lot of confusion because at one point, if we talk about commodities and crude, it has a positive impact on the equity as an asset class, you know and when we
Right.
talk about dollar index rising, so that is again not a very feel good factor or so good factor for the index. So these kind of
Right.
factors, as a technical analyst, should we really look into and give importance to, or should we just be sticking to our equity indices and having a top down approach with respect to index and sectors and stocks?
See, intermarket technical analysis or taking a look at intermarket parameters is useful, but do not try to time your trades with this.
Right,
If
makes sense.
you take a very close look at crude every day, dollar every day, gold and other assets every day, and try to time your Nifty, it's not a good thing to do it for the short term trading. Yes,
Makes sense.
when you take a look at a medium term to long term picture, when you try to understand how global money is playing out with the US rate of interest rise, money is pumping towards debt. The 2 year and the 10 year yield curves have come very close to each other. People are, the chunk of the money do not want to take risk in emerging markets or smaller markets.
Hmm.
So all these kind of macro things, if you understand, if you have
Hmm.
interest to understand economics, is good. But with
Hmm.
this, you cannot time the market to the
Hmm.
precise. If you read, let's say, the 2 year and the 10 year yield curve reversion for the US markets, I think for the last 100 120 years, the research that has gone that most of the time when they reverse, they lead to a recession. But the recession might happen after 3 to 6 months or after 9 months. Be able to time it. So it's these kind of things are not good for a short term trader. If your mentality is from a trading point of view that I will buy based on price, I will make some quick buck and I'll get out and I'll repeat this over and over again, then these things, it's better you don't even look at it. You just
Hmm.
focus on price and price. That's the best thing that you can do. You focus on these things from a slightly larger perspective. That
Hmm.
should I, with the Nifty PE less than 20, with the crude now dropping below 100, with the index now down 18% in the last 34 weeks, uh, is it a good time to start buying in the equity market? If yes, then which are the sectors? So look at it from a slightly medium term to long term perspective, not for timing the market, but to understand the nature of the markets. And money will always chase more money. Money will always go to that pocket where it will grow more. So you need to
Right.
understand that the rotation of the various asset classes. Now this rotation of various asset classes also breaks. The correlation also breaks. In 2008 crash, everything fell, left, right, and
Hmm.
center. All asset
Everything.
classes crashed. उसके पहले जो भी किताब लिखा गया था इंटर मार्केट ये होता है वो होता है एक्सेट्रा एक्सेट्रा एवरीथिंग वाज डाउन with that fall. So as I said, these things are good, these things are essential, these things are important, but they are not for the trader. They are for, let's say, for a better understanding of the market and for the
Investor.
investor.
Abhijit, a few questions. I think people want to know what indicator have you plotted on your chart? I think twice or thrice the same question by different people. What is the name of this indicator and how exactly you plotted it?
I have quite a few things here. Nevertheless, I'm sure they're asking about this. Uh, uh,
Highlighted thing, I guess.
these two highlighted lines. These are nothing but exponential moving averages. This is a 5 period exponential moving average, and this is a 21 period exponential. It's just color coded in such a way that it looks good when both of them slope up and slope down. It gives a nice feel and look to the chart.
Also, I have a question that, this technical analysis AST, do we have it in Hindi or a English also if somebody is not very fluent with only English?
So primarily, it's in English. In fact, I'll tell you a small story. In
Hmm.
2013, in BKC National Stock Exchange, they conducted a 2 day workshop on technical analysis,
Hmm.
and I was invited as the faculty.
Hmm.
And I think that was the very first MDP, the very first MDP technical analysis in BKC. Anyways, so I go there, and Saturday morning the session begins, and each session was around 70 minutes to 90 minutes. Uske baad ek break, another session. So the first morning session started 1.5 hours. I showed my PPT. I was talking to everyone, and then there was the tea and coffee break. So tea and coffee break is essentially you meet everyone, say hi, hello, network and all. And so one person comes to me and say, very nice sir, मैं इतने सालों से ट्रेडिंग कर रहा हूँ, मैं पहली बार एनएसई के बीकेसी एनएसई के ऑफिस के अंदर आने का मौका मिला, एंड ही स्पीकिंग टू मी इन हिंदी, एंड मुझे बहुत अच्छा लग रहा है, यू नो ही इज फीलिंग वेरी वेरी नाइस, आपका सब अरेंजमेंट बहुत अच्छा है, आपका पीपीटी बहुत अच्छा है. एंड देन ही टेल्स मी दैट लेकिन मुझे कुछ समझ में नहीं आ रहा. I said, why, what did I do? I thought I tried my best to, explain to my best capabilities. He said, no, you're doing fine. आप सब ठीक ठाक हो, सब लोग ठीक ठाक है. मुझे इंग्लिश समझ में नहीं आता है ढंग से. So I told him that highly possible that you're maybe not good in English, but you should have told me this at the beginning, right? You're telling me after 90 minutes have passed. Nevertheless, coming to your question on AST, I have faced this. It's not a concern exactly, but I've faced this thing. But we conduct the course primarily in English. I don't use any PPT per se, but whatever discussion happens is in English. Once in a while, I can speak a bit in Hindi. As of now, we have never taken an AST which is 100% in Hindi. I think we can do that. क्या होता है ना, we live in a very diverse country. You will speak in English and someone might say that sir जी मेरा English उतना अच्छा नहीं है, हिंदी में समझाइए. And the moment you start to speak in Hindi, someone will say, sir, I am from Hyderabad or I'm from Bangalore, I don't understand Hindi, please. I'm not blaming anyone. It's just that we live in a country which is so very diverse. So sticking to one language is an easy option. So primarily it is in English. Kabhi zarurat ho, someone is not understanding one point and he asks me in Hindi, I can deliver the thing.
Fair enough. Fair enough. Okay. So I think I have taken most of the questions, Abhijit, and we've got a fair idea also that how we see markets, how we learn to analyze markets, also how can we stick to our strategy, all of that. So that was a great session. That was a great learning. It's always good to talk to you. There's always some key takeaway, which I at least take away when I'm speaking to you. So thank you so much.
Thank you.
Thank you.